All right, let's go back and let's do, if the two things happened at the same time, you can simplify things a little bit, right? You could just say, okay, I'm just not going to go through accounts receivable and accounts payable. The barter happened at the same point in time for the same value. You might also ask, how do I know what the value is? Well, you know what the value is because you know what you normally sell your goods and services for. So that's what you would expect, what you've received in equal value, and you know what they sell their goods and services for. So you can, you should be able to figure out the value that you received versus what you're giving, right? But let's say we did this at the same time. So instead of entering an invoice, I'm going to enter a sales receipt form in essence. And so let's say we have a sales receipt form, and let's say this is for this time, let's say customer 2, and we're going to say okay. And so now this time, let's imagine that they gave us personal meals rather than meals for our business, right? So then I can't really record it as an expense is going to be the problem. And we provided landscaping services. So the services we provided, I'm going to say are going to be, we're going to get paid by, we're going to say the trade again, and it's going to go into the clearing account, cash clearing. And we're going to say this is going to be service. I'm just going to make generic service item 1. Let's make it 200 this time. So this will be the same because we still provided landscaping services. It should be revenue. This is going to now record revenue, and the other side is going to go into the clearing account directly. So I'm just going to say, instead of going through accounts receivable, let's save it and close it. And then I'm going to go back to the balance sheet, run it to refresh it. And now we've got in the clearing account, there's the 200. Go into the income statement, run it to refresh it. We see that revenue went up by another 200. So now we're at 300 of revenue. Let's go to the first tab and say, then we're going to enter the other side as, let's say, an expense type form instead of a bill and then a pay bill, because it was equal value at the same time. We'll say this came from customer number. So this will be customer number 3, I think I said. And so customer 3, this time it's not going to come out of the checking account, but the clearing account again. And we're going to say, what's the category? This time they gave us something personal. We didn't have a business expense. So let's put it into our equity account. I'm going to say I want a new account, and I'm going to call it draws. I don't think we have draws yet. I don't know. Maybe they do have draws. Let's check it out. Draws. So maybe not. Let's add it. Draws. And if it was a sole proprietorship, if it was a corporation, it'd be something like dividends, which will be a problem, right? But if it's a sole proprietorship or partnership, you would make it draws to the partner or owner that took the money out, which would be an equity type of account. So account type, this is the important component. It's going to be an equity type of account. And we're going to say owner's equity. We'll just say as the other type, no opening balance as of description. We'll keep it there. So let's save it. And we're going to record that. What did I say? $200. And so this is going to decrease the clearing account, and the other side isn't going to go to an expense, even though it's an expense form, because the expense form is really just showing the category that we put it to. In this case, draws, which is an equity, won't go to the income statement. Save and close. Let's go to the balance sheet, run it, and now we can see the clearing account goes back down to 0. So that looks good. And then I could say that just nets out, and then the other side is now not going to the income statement, but to draws, because this should not be an expense. It would be similar to if cash happened, then we would have cash, and then we would give the cash to ourselves as a draw, and then we would pay for it out of our personal account, right? That would be how we would like it to work from a bookkeeping standpoint, because it's going to get messy if you start paying for personal things out of your business checking account, because then you have to decide what is personal, what is business, which is more difficult if the bookkeeper isn't the one that is the owner in particular, right? So if you're doing bookkeeping work, you would really like people not to use one account for personal and business, because you would like the money to come out of the business to the personal, and then they spend out of the personal account. But it's possible if you spend something out of the business account, or if you have this draws situation, if we recognize it, to record it not as an expense, but as draws would be the general idea. All right, so that's going to be that. And then on the first tab, we could track this information by going to, say, the vendors, and now I'm going to look at clear, so I could see all the vendors, and we have vendor number 3 here, and then we could see the activity for the expense form that is in vendor number 3, and then on the sales side, we could go to the customers, and we can look for vendor number 3. We want to see no filters, and I think I put it into customer number 2. Let's go into customer number 2. All right, there it is. The sales receipt form. So there it is. So again, we could track that information. So whether there be, in a barter situation, again, it's quite possible that you're providing more value or they are providing more value at any given time, in which case I think it's useful to use the accrual system of an accounts receivable and accounts payable to try to have some kind of idea of what that is, so that, again, it doesn't get out of hand. It doesn't feel like one is providing more than the other, and the other is going to get upset over time. So you know where everything, or at least you know where you stand on it. I think more transparency is usually good. So and of course we have to record the revenue even in a barter type of situation. And of course we want to record the expense in a barter situation, at least for an income tax purpose, as many small businesses need, because if it's an expense, we get to take the expense, but we have to also record the revenue. All right.